everybody? Brian here from quantlabs.net. Ciao. How you guys doing? So you guys can see me okay? Awesome, awesome, awesome. Okay, so what started out as somebody sent me a email last week on the Bloomberg Terminal service, and I'm not going to be doing any formal presentation. I'm hoping you guys have watched two of my videos that I put up last week on this Bloomberg Terminal manual and others and resources for it. This is really has answered a lot of my questions. I was mentioning earlier about how this service with a news app has really, over the last 6 months, has changed my outlook on how to view the markets. Typically, how I work it is I have my Instagram channel, and all I'm doing is just putting up videos and images of what I'm finding on Instagram, and I've wrote a little script that will go out and look for the most popular items out of that batch, which I'm doing every day. And the ones that I'm posting on have been pretty decent calls, but usually I can post about 20, 30, 40 a day, and I'm trying to do it every trading session as well, including Sundays. And one of the best ones that I found that was working really well was Bitcoin. And Bitcoin, as I said earlier, if you had followed some of these recommendations, you would have doubled your money in between March and, let's say, the last few weeks of May. And you would have done really well. I've had other instances where there was a call for Brazil, the stock index, Bovespa, as well as the Real, and there was like the next day 3-4% moves. Another example is I had a call from this thing, and within it was a week out, where the U.S. Supply of oil, especially with shale, and the number of rigs that are coming online at that point, a week later, there was some news items coming out, and it greatly impacted the OPEC supply. And basically what OPEC were trying to do is they're trying to bring in the U.S. suppliers to be part of the agreement as part of the oil supply cut globally. But because the U.S. wants to be independent, they don't need to be part of the OPEC deal. So they, say screw you, especially under Trump. And basically the oil supply kept tanking. So tonight, just like an hour ago, an article came out, said, well, guess what? There's been two news items. One was the Kurds have signed an agreement with the Iraqi government that has are now going to start pumping out a lot more oil. So what I start doing is I start digging into this, and I put up another alert about how India, their number one supplier now for oil, is out of Iraq, not out of Saudi Arabia. So what's happening is Saudi Arabia is starting to lose control over the whole global oil supply, and Russia's really not wanting to be part of that as well. They did sign the agreement, but they only kept their supply down for 2 months, and they kept resuming the pumping after 2 months. And it's these sort of things that you get to see on the Bloomberg Terminal, or I should say the news app, and you can get some really good calls out of them. So I just wanted to present that as well. Now I can kind of go overview of this PDF that I've got in front of me, and it's a pretty powerful, just a different view of the market. And I just put together all my Python scripts. So I'm going to start bringing back my Python scripts and start reinstituting them into my infrastructure. And I don't know if you know, but with IQFeed, they've now dropped their prices for both watching futures market as well as the options market. It's like $50 a pop. So for $100, if you want to watch, let's say, the U.S. markets on top of the global forex, you can get some very, very good data, both historical as well as real time, for about $200 a month, which is a really good deal. And again, that would include your U.S. markets. I think part of that's including the U.K. as well as the forex, global currency, as well as the futures and options markets as well. So it's a really good combination for overall trading. There is another option in there where you can do options for equities, but I'm not really interested in equities right now specifically. I mean, if you had put money into the U.S. markets back when Trump came into power as in November, obviously it was a 25-30% return on the markets up until that point. But if you've also were watching the Bloomberg, you would also know that the emerging markets were outperforming the U.S. And it's been proven where two events happened last week, again, from Bloomberg News, is that the largest ETF, and again, this idea came out of this type of analysis where ETFs, if you watch the flow of ETFs, specifically the big ones, it's another really good confirmation on figuring and confirming the turning of the markets, especially where the markets have been range bound for the last month or so, especially in the US. And you start to see confirmation of outflow of those large ETFs are coming out, and that same money is now being poured into the emerging market equities. And one of the interesting ones I found was if you were to watch, let's say, Pakistan's probably been one of the hottest markets on the planet right now, and they're over the last few years their markets have gone up by 50 times. I mean, it's an immense run. It's incredible. But there was a lot of foreigners were putting money into the Pakistan markets, but also they were hoping that that Pakistan would become part of the MSCI global index, and that didn't happen. Then you saw the huge drop because of that. They were not accepted. That news did not play out for Pakistan, and as a result, the markets went. So if you know to watch for these kind of events, you can do very, very, very well. So let me know if you got questions. I got the chat right now open. And I can definitely take questions overall. But what I'm talking about here is when you go through the table of contents through this Bloomberg Terminal, you obviously get Bloomberg markets here. And then if you break it down by asset class, like equities, and then the type of analysis that you want to use, fundamental or technical, you can follow these techniques and then apply them or implement them into your own what I call analytical scripts, if it's Python or whatever you're using. And then, of course, econometrics is a huge factor that drives a lot of areas in the markets, futures and options as well, as well as obviously commodities. Commodities is down all throughout. Another call just came out today about palladium and how the U.S. Car sales have come down, manufacturing is down, and as well the markets or the palladium markets are down. If you knew these kind of calls, you know about these relationships, you know about these patterns, and you follow exactly these patterns from watching and learning what is posted through the news app in Bloomberg, you can, within a year, well, I'd say within 6 months, you can, with confidence, understand those patterns and to be able to make those kind of calls, when to short, when to long, based upon certain economic conditions that you can watch for in the Bloomberg news app, and it's been very powerful. And also, obviously, currency is a big factor there, and all the rest. So this is just a general overview of the how the whole Bloomberg Terminal service works and what you can subscribe to. So Ron asked me, am I using the Bloomberg Terminal Experience $2,500 a month or just news? That's from Ron. No, I don't use the Bloomberg service. I don't have $2,500 burning in my pocket. I've heard that. Now, you got to remember that there's just the basic service, and then there's the menu options that you pay to access. The other big problem I have with Bloomberg, well, I shouldn't say problem, but it's a 5-year term. So when you sign up, you're signing up for 5 years. So it's pretty excessive as a term. As well as you got to pay extra for all the different major asset classes that you want to watch, or the different types of analysis you want to do. And my mouse is going crazy here. So, you have to pay for that overall. Okay, so another question. Oh, hang on here. Okay, so can you expand on the service you use? Okay, yeah, Ron. As I was saying about, I'm not. I just want you to understand. I'm not here to advertise stuff. I'm just showing you what I'm using and showing you what I have been fairly successful with in terms of my analysis. So, what I'm going to do here is I'm going to show you my one of my data sources, and I'm hoping you know about it. Just give me a second here. I'm going to show you my browser. Just give me a second here. Okay, can you guys see my browser okay right now? Can you guys see my browser okay? Because this is, okay, browser, yes. Okay, so right now we have IQ feed. So what I'm referring to in terms of data, historical and real time, I'm not sure if you know, a week ago, Yahoo Finance has cut off their historical data API. They do still have access to it, but you have to go now even more strict by setting up an HTTPS secure with your connection, and you can only really do it through a server, a web server. So it's not as easy as it used to be by just logging into, just give me a second here. It's gonna try to unmute one person. Hey Isaac, how you doing? Got Isaac here, who gave me this idea, and I've been doing it for a while. But he's the guy that sent me these terminal PDFs that I'm showing you. So back to the data source. If you go under fees here, under IQ feed, this is really good. Right now, as I said, you pay a $50 startup fee. You pay $78 for the core service. And I think the core service includes US equity as well as UK equity. And outside of that, you don't really care about playing in any other kind of markets. I've done all the testing on what's liquid and what's not. And the only two markets that I find that are liquid are US and UK. Okay, so then we get into these, as I said, these pricing options. So if you want the global currencies, I believe it's $50 a month. But this is the one I'm referring to here. These ones or $20 is pretty good. Is the futures and options market. Here you'll find, as I mentioned here, the equity options. I personally wouldn't play in the equity options. I'm not really interested in micro. I'm more interested in the macro indices and the futures and options and forex. You just get better volatility in those. And then, of course, if you want to go to a greater level, just add on another $20, level 2. And then here, if you want to add on some, they've changed this, so I don't know the details of this, but I can put this link in the chat so that you can. Let me just give this to everybody. Okay, so that's my data sources that I plan to use. There are just some caveats here. If you are non-Windows, meaning Mac or Linux, IKFeed, I've got right up to the VP, has acknowledged that they want to focus on Windows, which is fine, which is fair. They want to focus on third-party solutions that run on Windows. So their focus there has not been too great on the Mac and Linux environment. But what I've done is I've set up a virtual machine with Windows and Excel and all the traditional software that I've used to download the data from IQFeed. And there's two tools that if you want to run Windows, just give me a second here, I'll load them up for you. Now these are the ones that I'm using, and they're quite good. I'm not a big fan of Windows, to be honest. I don't really like it, but I'll give you some tools that I do know that work. I've been using them for many years, one called Q Collector. And this is where I use Q Collector basically as, and I'll just put in the chat this link here. It's about $140, and basically, just give me a second here. Yeah, so there's two options when you sign up for Q Collector. You want to make sure that you sign up for the there's a DTN and e-signal. You want the DTN option for IQ Feed, because DTN owns IQ Feed, and they just went through another takeover of another company, just took over DTN, which again owns IQ Feed, but there's been no impact on the service. Okay, so that's one piece of software you can do, and the neat, this software makes it very convenient. You just start up the Q Collector, you press start, or start it basically, and it'll automatically connect into Q Collector, and then you can set up these portfolios of assets that you want that you could subscribe to through IQ Feed, and then you can definitely generate whatever kind of CSVs you want, be it real time, meaning what do you call it? There's the minute, hourly, 5-minute data, whatever type of data you want, as well as tick data as well. And all that same price, you get access to that. The historical goes back at least 5 years on a lot of the assets that you can get access to. And the nice thing about Q Collector is it will generate a CSV for you on that particular stock or instrument. And it's really cool, because then you can generate your file, your flat file. If it's a CSV, you can also generate it and have it tab delimited, comma delimited, space delimited if you want. And then what I've done is, or what I will do is, I have a virtual machine running in the background, running Windows with that connection to IQ Feed. And then what I can do is I can have my Q Collector run in the background within the virtual machine, and then it'll be automatically connected into IQ Feed. And then what I'll do is I can either on demand download whatever data I want, historical, or if I want real-time data, I could set up Q Collector to collect the data in real time and add that to the CSV. And then within the CSV and then that directory, I can share to my Mac, which is the host, and then have my main Python scripts get access to that data. It's not the best solution, but we're not trying to do high frequency trading here. We're just trying to do basic analysis. You could do real time or tick data, but again, you're never going to get to high frequency level through a retail broker. But it's just it's a very convenient, quick and dirty way to get access to that data. And because Yahoo Finance has cut it all off, this is your next best solution. But regardless, you're going to have to spend money to get access to data. And the nice thing here is you can generate your own historical data, and you can generate your own tick data as well. It's quite good. So I'm not sure if that answers your question. I'm hoping it does, Ron. Like, I've been doing this since day one using IQ Feed, but I've been trying to get IQ Feed running on my Mac and even through the Wine project on Linux, and it's just a real pain. Even their developers have admitted it's not the best. So this is, unfortunately, my only option is to go through the virtual machine option. And I got a video on that as well where I show you how to install it as well. Okay, so let me go back to the PDF here. So get you to my PDF again. Okay, can you guys see my PDF now? Okay, so here we are with the usual login. Obviously, I don't have access to Bloomberg, but the cool thing about the Bloomberg is there's some really very, very powerful ways to analyze data. And what we're doing, as I said, we're using the IQ Feed as the supply of that data, and it works nice. So let me just show you some examples here. Okay, so let me the fundamental, I'm not sure if you're all that interested in. We don't care about the keyboard. But what I'm after is analyze different ways to analyze the markets, analyzing the similar ways that you can analyze using the Bloomberg service. But what I'm doing is I'm using this as a role model, using this as a roadmap, using my access to public data out there, downloading it, as well as whatever I can't get access to, I go through the IQ feed as my other option. That's the approach I'm taking. So hopefully you understand that. See, here what I find interesting is that these are some of the tweets that they use as a source of data, like New York Times is here. Is it Washington, Wall Street Journal, I think I saw in here. Washington Post. So they do offer tweets as a source of data. For me, I wouldn't do that, but it's there if you want to use it. Of course, there's news. One of the big ones that's part of that core service and IQ feed, they do supply news. You can also obviously get news through your broker as well. If I go with Duca's copy, I think I've shown a video on that where you can get, a lot of news out of Duca's copy, and those news events greatly impact your trading. I'm just trying to think of a recent example there's a real, as I mentioned, with Brazil, but I think there's like Australian dollar. There's always a nice relationship between, classic one is Australia and China, where Australia is heavily dependent upon iron ore as a major commodity being exported back to China. And if you watch the Chinese yuan and the Australian dollar, that can be a nice trading pair to watch those kind of relationships with trading, the trade flow between those two countries, as another example. Let's see. Okay, let me just show you. We're moving into some equity stuff here. Now, if you watch my video, here you'll notice a lot of the indices, in real time on their moves in real time. You could do the same thing through JStock on that, an open source piece of software. Just do a search on JStock and you'll find it. It's written in Java. It's very nice to watch that. And one of the other tools, if you want to do this in a non-programmatic way, is you could use a tool called XLQ, which is an Excel worksheet. And then they have a lot of technical analysis indicators right in the spreadsheet. And they actually have, as one of the worksheets, is exact spreadsheet that does these sort of things, especially on this next one I'm going to show you. See here, you see this a lot on CNBC as well as Bloomberg, and they give you a overview of the market sectors, what's hot, what's not. This is really good because if you want to get a quick snapshot of what's happening in the markets, specifically in the U.S. markets, there is a worksheet that does this using XLQ. It's a very good way to watch what's happening in the markets, and there's some charting that comes with the XLQ too. And again, that's all in Excel, so there's no programming needed. So again, there's a lot of technical analysis stuff you can get with XLQ. So if you're really good at Excel, and you put that on top of your IQ feed, live feed, man, you're off to the races. Some really nice stuff. But again, I'm just showing you how the terminal service works through Bloomberg, and you can mimic it on your own tools. So that's what I'm trying to provide are those tools and what is available. I'm going to stop right now. Anybody got any questions so far? Let me just see the chat here. Can you expand about the data you collect from Bloomberg? Ron, I have no affiliation with Bloomberg. What I'm doing is I'm showing the features available in Bloomberg, and I'm trying to mimic them through other data sources. And the big one, as I said, there's a lot of public data out there, but the paid commercial data is coming through that IQ feed. So that's what I'm trying to do here. I should have said that up front. But what I'm trying to do is I'm trying to mimic all the different ways that the terminal service works, and finding tools out there, affordable tools that will give me the same functionality, some functionality that I'll find with the Bloomberg terminal service. Because after about a year consuming the data on the Bloomberg News app, I'm really finding it's the best way to trade. You hear about quant, math, and whatever else. Let's say machine learning and all that. It's all fine and good, But this is what the professionals are using. This is how the professionals view the markets. So as I said, I'm trying to mimic what they use, but I'm trying to do it in an affordable way, if that makes sense. My apologies there. Anybody else got any questions so far? So what I'll do is, I think the next big section is on fundamental. See here you can get all of these important. Now let me. If you do want to trade the markets, the stock markets, I should say, you want to make sure you use always forward-looking data, nothing else, not current data. Use that for confirming your trades. Past data is really no use. Yeah. Oh, hey Jack. I guess you're new. Yeah, IQ Feed's my only data source. That's paid, but there's other sources that you can use by downloading data from online for government data, like the Fed, or if you want to get it from the Eurostats or from a central bank like Bank of England. You can do that and use Python to download the data, and it's very easy. Like I said, they're like Jack's asking about free data sources. Central bank's a good source. The Fed, UN's got some stuff. Quandl's a great resource. There's also Bank of England as an example. So, just do a Google search and look for the data. You'll find a download link and just get the URL of that data link, and then you can plug that into a Python script. I can't remember the name of the Python package that will download that. And then what you can do with that package, it will then, once you download from that URL, then you can turn that data source, which is usually either XML or some format like JSON, and then you can export that data into a CSV. And then you can parse it up using Pandas or NumPy, get it into a data frame, and boom, you have it in a chart, and you can do your analysis from that. It's very simple, and Python's amazing at it. You can do all kinds of crazy stuff within 5 lines of any data source. You just got to provide it the URL and then understand the data format and then parse it up. Lots of examples out there. Make sense? Okay, no problem, Jack. Okay, now this is really important to understand the difference between technical analysis and fundamental analysis. I use technical analysis only for one thing, for confirmation of trading ideas and trading positions. That's it. There's a great misconception out there where a lot of these traders that learn through, these very expensive schools, online academy of training, or they call it, or Tim Sykes, or all these guys, they use technical analysis. What you need to do is always look at forward-looking data, and you always want to use fundamental data. So you want to use econometrics data is the big one, and that's where this fundamental analysis comes in. The key, what I'm trying to show you is, as I said earlier, is to find the patterns, to find the consistencies and things that are predictable. As I said earlier, there's an example of Australia and China. That's a very, very predictable trading pattern from an economic standpoint, and there's probably you could get 5 trading opportunities out of that one relationship. Another good example is, let's say, the Canadian dollar. You could watch the Canadian dollar move with the oil price, and it's co-integrated pretty nicely. And if you understand these kind of patterns, you can easily trade and predict market direction at both ends. In that you can get through the fundamental data, but you have to understand those patterns. That's really key. And that's why I find this is the best way to really understand how to trade in a very simplistic way, but at the same time in a predictable and consistent manner. And from what I've seen over the last probably few months, as some of the examples I've highlighted, you can do really well. And they're really nice swings, I guess is the right way to put it. So here, this section of this manual goes over all the typical things, but this screen is very important because these are your menu options. Okay, these are what the things use. These are what things are used by Bloomberg or financial analysts at banks, at hedge funds that are paying as Ron said $2,500 a month and up. These are the ways they look at the markets. Okay. Hopefully so these are the sort of screenshots you want to look at. And I'm going to show you a ways to drill down this because I've got some links. Yeah, exactly. Isaac says, is it 25K a month or 25K per year? Because I've heard it's up to 25K per year per seat. That's meaning per user. It's very expensive, but that's why these guys use this service. And believe me, if you understand it, as Isaac says, it's per month. Thanks, Isaac. So it's expensive, but what we're trying to do here is get as close a way to analyze how this service works, why it works, and try to mimic it with alternative data sources. And what you're trying to figure out is the trading patterns, the predictable ways to consistently trade. And I'm telling you, there are many out there. It's amazing. So when you see these options here, definitely pay attention. If you've got access to the Bloomberg service, analyze these, reverse engineer these, and try to code them up and get the alternative data sources. Lots. IQ Feed's a very cheap and affordable data source that gives you, as I said earlier, what types of data you can get access to. So here, this is a really good example of how the analysts will look at a stock. So here they're going to be looking at, again, forward-looking price earnings per ratio right here, earnings per share. This is forward-looking, nothing else. Okay. Yes, you have the weekly high and all that, but what you're looking for is the valuation of the stock at this current time and what the EPS will be, what the PE will be, so you can get a gauge on the risk by putting on those trades. You don't care about anything else, but you got to make sure it's forward-looking, okay? And that's pretty well the only type of analysis you need. Here is another example here. If you want really, you want to analyze from a historical point of view for performance, beta versus SPX. So you want to take this stock's beta and then compare it against the SPX, which is obviously the S&P as a benchmark against the beta, and historically you can see if the stock is doing fairly well, which hopefully if it's greater than 1, it's beating the S&P 500. And the other thing you want to look for is in here you'll find the market cap somewhere. And the other reason they use market cap is because they want to make sure they want to have a company that's at least $1 billion for liquidity. So that, if they go into a position on a particular stock and things go haywire with that stock or with that sector or with overall in the markets, they can get out fast because it's liquid. And that's kind of important. So I'm just giving you some hints here on what's important. But again, this is at a micro level, at the stock level. And again, here's some other screenshots that you can use that's really helpful to really understand from a true fundamental, from more of an accounting point of view, on what's important in the stock. I don't know if I'd pay attention to this, but knowing this information is very helpful, and you can get that through I believe through Yahoo Finance still, because it's considered real time. But again, you can't get the historical. I just can't remember. There's some tricks to it, and I believe you can get the same data here from XLQ as well. So again, these are just past performance with their past revenue, and you may want to compare it against another stock in the sector and blah, blah, blah. Very typical classic pair trading stuff that I have in 2 of my courses to show that. Okay, so that's kind of, I think, and the earnings screen is also important as well. And again, you really want to pay attention to all the data that sits here. It's there for a reason. And that's what the analysts are using. And if you have a way to get access to the data and be able to analyze the data in an automated way, you will do very, very well, especially if you know what you're looking for. And again, from my perspective, that's where reading and consuming that news app from Bloomberg to, again, understand how basically what you're trying to do is you're mimicking the money flow, the hot money flow. And if you're just ahead of that hot money flow the day before, you can do very well. And that's what the Bloomberg Terminal really gives you, is true trader's edge. Because when you look at the news app at the bottom of each story, it says, hey, get this story before we put it on the news app. maybe a couple hours or even 24 hours. So you can line up your trades. Then they put out that news item the next day, and the professional guys are lining up those trades. Next day, that goes out to the general public. So I've seen a lot of those kind of stories before. Okay, so again, it's all about understanding the consistency of those patterns and what you can view in the markets. Again, fundamentals. These screenshots give you so much data. It's so much juicy information. It's incredible. I'm just trying to see what we have here. Again, return on equity, price to sales ratio. Very important stuff to give you an idea of an analytical point of view, and then compare it to another stock in the sector if you're going to do pairs trading and blah, blah, blah. And again, you can get the historical pricing. You can get that easily through XLQ or JStock. Just XLQ is good enough. Or you can make a call to IQFeed and then download all the data you want. Or again, you can do the same thing through Q Collector as well. Dividends, I don't know if there's a lot of income with that. Yes, but you could do way better in other areas in the markets. You want me to stop and take some questions if anybody's got any questions on it? But the key here is to look at exactly what are in these screenshots and try to mimic what's out there. Let me see what this kind of... so these are the owners of a particular stock, I believe. And again, you will not be able to get this kind of data outside of Bloomberg. I don't know where you can get this type of data. I'm not sure if it's relevant for a retail trader, but it may be important for a professional who's putting in millions of dollars in a particular set of positions and understanding who owns what. Maybe what kind of websites. A good website to go to is Trading Economics, Market Watch. Yeah, that's true. So again, if they have a paid subscription, thanks. Well, with CSI, that's for futures data, correct, Isaac? If that's the case, you can use the IQ feed at a much more affordable price to get that futures data and options data. Because I know some people that have used CSI, but they pay literally hundreds of dollars for just certain particular data sets of future or commodities or whatever they're watching. And again, as Isaac says, the company info as well. But again, you have to. But I'm speaking of from a automated way. If you can find a way to get access to the data online, download it, put it into a CSV file, and then parse it up, put it into a data frame, and then be able to use that for analysis, but do it in an automated way. And I'm going to be doing hundreds of scripts that do that. And just looking for, I guess what you could say is I'm looking for relationships, set those rules, those parameters, and as soon as something's breached that you may be watching, you know that is lining up for a potentially good position, either on the short or on the long of whatever you want. Again, the ownership. This stuff can be kind of important. There are some news items that I've seen that show the historical events, and can be good to show past relationships. But again, you've got over 40, 50,000 different assets to watch. So, you got to really pick your time well and what you think will give you maximum return. Okay, so here's some analyst stuff. One thing I'll say about other analysts is that they're usually wrong. You don't want to really pay attention to a lot of analysts. I've been told by many hedge fund managers, do your own research, do your own analysis, understand that, and make your own calls from that. It's very important to understand that philosophy and not use third parties or whatever data sources or whatever, like Cousin Johnny as an example, because they trade and they got a hunch that this is going to be good. Just ignore all that. You confirm it with your own data and with your own analysis. Really important to understand that. These are the sort of metrics you want to use if you want to go deeper into analyzing some more examples here. Debt distribution, weighted average cost of capital, relative valuation. This one's really important, is weighted average cost of capital. What that basically means is if you're going to put in a position that comes out of your portfolio, you have to take some risk measurements and figure out what is the cost of me deploying that capital on this opportunity, and be able to understand that. And that's where I think machine learning will really come in very, very useful. And that's where I think machine learning is excellent at that, but not for this kind of trading, because it's not consistent. I don't think. I mean, I could be wrong. I mean, I don't know what's going to come down in the future, but what I've seen, this is still the best way to analyze the markets. So we're looking at relative valuation. What basically this means is we're trying to figure out the value of a stock before we put on that trade. So again, these are sort of metrics you can use: return on equity, price earning ratio, debt to equity. Like if it's too high in debt, it's too high of a risk. And as you know, it's all about risk and reward and all that. And again, if you look at these type of data that are in these screenshots, you can go, yeah, they must be pretty important. But the ones that are really important are EPS, price to book, and all that. You can get that typically through either Yahoo Finance, real time, I think still, or the IQ feed, if you're doing stock analysis. Now, this is really important. Nobody ever talks about it. Supply chain analysis. And far as I know, there's a couple of sources you can go to understand this for trading purposes, for company trading purposes, country, I should say. So again, let's say Canada, as an example, with the Canadian dollar. We talked about oil. What's Canada manufacturing? What is Canada exporting? And of course, that will have an impact on the dollar. That's going to have an impact on the flow overall of the economy. A great example I already brought up from earlier today is you want to look for the countries that have palladium, okay, that are exporting palladium, and you want to watch those exports coming out of that country that are, let's say, going into the U.S. Car industry because they use palladium. If the car industry is down, they have to put orders in for palladium. Okay, this is the supply chain I'm referring to. Palladium gets ordered for car manufacturers. So if the car manufacturers see the outlook down for orders on cars because the economy's down or something, and that's what's happening right now with GM and Ford, palladium's going to go down, and that's going to have another impact on the dollar of that country that exports palladium, manufacturers. Obviously, it's going to impact all the countries around, companies that make palladium, ship it, fabricate it. I probably just gave you 5 trading opportunities right there, just on the supply of palladium. Okay, and on the other end, the companies that import it and use it, and there's some very good examples of that in this service from Bloomberg. So Isaac asks, manufacturers charts SMI. Yes and no. Yeah, you can get that through economic data, through, I'm not sure what the SSI is, but you can break down by commodity by doing what they call commitment of trader reports. Let me go to my Bloomberg here, or my do another share. Just give me a second here. Okay, let's go to my browser. Okay. Hopefully you guys can see my browser here. So Jack asked how to get data, how to download data. Okay, let me show you a simple way. If you go to Google, and as I said, if you know about commitment of trader reports, a lot of people never talk, the professionals never ever talk about this, okay? So if you look at commitment of trader reports, and this is from the CFTC, and this is the American side. So if you look for the different reports, weekly commitment of trader reports right here. Okay, so it comes out every Tuesday, I believe. Yeah, so it's weekly, I believe. And I'm just trying to find out the actual reports. Okay, so let's say if I do the... so here you can break it up. Now this is by commodity. So let's say energy, as an example. You can see here you can get all this data through this site, and you can also download a CSV, and then you parse it up in Excel or in the CSV. You can do all that in Python. It's very simple using pandas. NumPy, very simple stuff. And here you can see you have swap dealers, manage money. I'm not sure if this is, this is the New York Mercantile Exchange. But this is heating oil as an example. So you can see and get an exact breakdown of who's ordering what, when, and this is always forward looking. Actually, it's current data, but you can use this data to maybe go back a month, get an idea how the demand is, and then you can put some trades on this. And you can do the same thing with pretty well any commodity through the COTS, through the COTS report, Commander Trader Reports. Okay, I'll just put this as an example in the chat. Okay. Okay. So I'm kind of giving you an overall way of how I'm doing it, but this is just one of many examples. Just give me a second here. I always keep my email client open. Let me just shut that down. Okay. Okay, so I'm going to put this in the chat, this URL that I've just showed you, and then I'll go back to the PDF. So that's just one example. Hopefully Jack is there to understand what I'm referring to. Okay, so let me go back to the Acrobat Reader PDF. Okay, so here we are. So just looking at this type of relationship, I'm not sure. This is for UA Equity. I believe that's United Airlines. Who owns what? Oh, sorry. This is Under Armour. So this is the type of ownership, their distribution, competitors, who their suppliers are. Sorry, I thought I quit that. Let me just quit. Oh. Okay. Okay, I should quit that. Okay, so looking at this report, it's important to understand these relationships, but to find these are very difficult. But you can easily Google, especially by country. It's really powerful to understand what country has what country exports what, and you can do all kinds of trades, future trades, option trades around that commodity, and then you can also do some currency trades based around that type of opportunity. Not only that, but there's also lots of ETFs and indices that focus on particular commodities by country or commodities by region. I mean, there's all kinds of amazing relationships that you can find there. And the way I find those relationships is through, as I said, that daily consumption of the news app from Bloomberg. And it's really helped me out. Pure product correlation. This is another important one. Obviously, this is for pair trading. And again, we want to look at the data, okay? So as an example here, you'll find here's all the particular companies in these in this sector, I guess apparel, let's say. So here you can calculate the market cap, industry revenue percent as growth compared to other companies, and you can use these indicators to gauge, using market forward-looking data as a really good measurement to find your long and your short. And you can use this data as well as the EPS, earnings price per share, as a way to find maybe the weakest player in that sector. Also, the one that has the best outlook, because that's what you're doing, is you're using the outlook, the financial outlook of this particular company or maybe this particular sector. And as I said, there's so many trading opportunities just come from these kind of little plays, like just looking at, let's say, Under Armour, Nike. You could you could look at their suppliers, look at the currency as they import that. I mean, there's so many ways to analyze it. Okay, so again, another example. Let's see what we got here. I'm just giving you ideas of what to look for in terms of these screenshots and giving you an idea of what to look for. It's very powerful stuff. Okay, so that's the fundamentals, but most of the trading ideas come from looking at, as we just looked at, the fundamental analysis. Okay, now we're going to use the technical analysis to confirm those trading ideas. Now, if you have a way to automate that in a database and then apply these technical analysis indicators to confirm maybe there's a trading opportunity opening up. You can use this technical analysis as a measurement to confirm those trading ideas, and then you can also use those same technical analysis to use it for positioning or timing your positions. So this is what I noticed here is again, looking at this screenshot. What do we have? We have candle patterns. We have commodity or CCI channel index, moving average, parabolic. Now, if you look at this word here, popular, these are the most popular technical analysis indicators used by traders. So if these are the technical analysis indicators that they're using, hey, why not apply them to your own trades? It's so easy to apply these with, again, XLQ as an example. It has hundreds of technical analysis indicators that you can apply through that Excel worksheet, XLQ, using, again, IQ feed as your data. And you can use these technical indicators through XLQ and program your Excel with the VBA to put up the alerts saying, hey, this trade's happening with this combination of set of technical analysis indicators. But the nice thing here is making your job a lot easier, because you're now looking at, hey, what are the really popular ways to analyze the markets using technical analysis? And this is like a give me right here. This is what the analysts are using. Okay, so just understand that. And here's a breakdown of one of them. Charts candlesticks while displaying volume, 1 minute chart. We can do all that through Python, no problem. And actually, if you're not a programmer, you can do the same thing using XLQ as well, right? It's a very powerful tool. And sitting on top of your IQ feed data source, it's amazing. That's all I'll say, it's amazing. So here we get how to build, I guess, custom charts. You can do the same thing, obviously, through automation, blah, blah, blah. More examples. But again, if you want, take a look at these screenshots, because these screenshots say a lot. I ain't kidding you. And this is what the pros are using, not guessing stuff. This is what they use using the forward-looking data, as I've mentioned here. So here, obviously in Bloomberg as a service, you can, let me just get this going again. No, wrong way. There we go. Oh, I'm getting there. Oh, okay. So right here we do these studies, so we can apply all these different technical analysts indicators to a particular chart. Again, we can do that through automation, through Python, through Excel, and if you understand either of those technologies, life is good. That's all I could say, really. And then you could build a combination and layer all these technical and analyst indicators to those charts and to that data that you're watching. So these are all different ways to customize your charts. So it's very powerful already what you can do with Excel or Python itself. Okay. So anybody got any questions through that at all? If there's anything, let me just check. No. Okay, so I'll keep blabbing, I guess. So again, you can always change the time period or the time frequency. Again, because you're using IQ feed, you're going to be, again, Isaac, as I said earlier, you're using technical analysis for timing positions. They're lagging. We know that. You always want to look for trading ideas. You always want to look at forward-looking data. So yeah, the technical and the indicators are lagging, but they're it depends on the frequency. If you're using real-time data or minute data, that's not too bad, but then you're going to get a lot of noise. How do you filter out the noise and smooth out those trading? Yeah, okay, thank you, Isaac. So yeah, he's just reminding everybody. There's a lot to chew on here if you're a newbie, but from what I've seen, best way to do it, and the smartest way, because once you understand those relationships and those fundamentals, you could argue with people on like trying to figure out why this is happening in the markets, because you know the patterns, you understand the relationships, and you most of all understand a lot more than what most people will know. And if you know how to automate it, you're going to see a lot more than even Bloomberg won't see, and that's what gives you that trading edge. So what we're going through here now is there's just the typical charting stuff, customization, saving charts is a big part of Bloomberg, so they do a big focus on it. But you can easily do that. Yeah. So as Isaac says, forward indicators, trend lines, and Fibonacci's. Exactly. If you want my honest opinion, the ones that I like are trend lines, moving averages, very simple stuff. RSI I see a lot of for just seeing overbought, underbought market conditions. Bollinger's another good one, as Isaac says. Yeah, you could go crazy on this, but again, there's that little screen I showed you, which are the most popular. You may want to mimic those. Candlesticks can be quite good actually, and that was the most popular in these screenshots that I saw. So what are we looking at? So again, we're just looking at technical analysis, charts, blah blah blah. There's a dime a dozen sources to go and learn about all that. And again, frequencies. You can use a combination and all that. Okay, this is really important. These are the different market asset classes that a lot of people seem to forget. Fixed income's a huge one. The big one is the treasury bonds with the U.S., the U.K., the gilts, because that's a measurement of what people are buying and have confidence when they buy a government debt, and that has a huge underlying of what the Fed does. So it's very important to watch these. Mortgage bonds is obviously another big one, as well as what they call the munis or the municipal. For example, Puerto Rico went technically not formally bankrupt, but they technically defaulted, and I'm surprised it hasn't had a huge scare in the markets. But the next one potentially to go is Illinois, and the other one potentially is New York City as well. So you can imagine those will have a bigger impact on the market. So if you're watching these sort of things as part of your automation, applying the same rules, you get to see those early warnings that other people aren't seeing. But again, as I said earlier, you may get a lot of false positives. So you're going to have to use another bunch of indicators to mimic what works and what doesn't work, and trying to filter all that extra noise with the false positives. But again, what you really want to pay attention to here is, if you're going to follow fixed income, is what's in these type of menus. So for instance, trade activity, derivatives volume, because derivatives volume indicates the confidence that the bond dealers will have when they buy up that debt or whatever they're going to be buying in auctions. If it's liquid, as it was in 2000 and 2009, the markets froze, and that's when the Fed and basically the U.S. government had to create the TARP program to basically liquefy their funding of the U.S. government. And it's because of this data that's really important to watch. TARP, I can't remember what it stood for. Isaac, was the program that the banks had to sign up for to take government money basically from the Fed, and that's when they added, basically within a month, they added $1 trillion to the balance sheet of the Fed, and it was like in a month that they were forced to. They wanted to keep the financial system in liquid and keep it afloat, so they just basically printed money, fake money. Well, you know how the Fed works with the with how the Fed works as a private company or organization outside of the U.S. government, and blah blah blah. And there was just basically a program to rescue the Fed or to rescue the U.S. government. Oh, hang on here. Okay, cool. Thanks. All right, so you want to pay attention to these. You definitely won't be trading them, but the fixed income is very important. The ones that you really want to watch that impact the economy is, let's say, the yield curve, doing a spread analysis. A good example is For the example of the French election a few weeks ago, they used the analysis between Germany and France to see if the spread between Germany and France was either narrowing or tightening. If it was tightening, that's good because it's now back co-integrating with how Germany plays out. If there was, let's say, Le Pen was to win, the spread would widen, and then that money that would typically go into France would then go into Germany. So that obviously impacts the German stock market. So knowing this stuff is kind of really good to know. And the other thing is to understand the yield curve, the short end and the long end, to understand the yield curve. If it's flattening, if it's steepening. If it's flattening, it means you're going into a recession condition. If it's steepening, you are in expansion mode. And then these are just examples that you can use to understand those relationships by understanding these kind of things and what are on these screens. I mean, you're not going to get access to a lot of this data. Actually, I lie. You can get this data through the Fed and through the central banks in other countries as well. But the ones you really want to watch are UK and actually there's quite a few. You want the Euro, the ECB, Euro Central Bank, UK Central Bank. You want Japan and China as well. And now up and coming is India as well. Okay, just hammering away on that. And here's the typical economy, the risk, basically by analyzing the yield on the government debt issue. So here in the U.S., we got the 2-year, what's it paying out, what's it 15-year, 25-year, and behold, a 50-year. Now, you want my opinion with a 50-year bond? Why would you buy that? That just goes to show that the U.S. government is so desperate to keep the government funded now. They're issuing 50, and I believe there's a 100-year coming as well. It's crazy. And I think Germany's got one too. And it just goes to show how bad in shape these countries are. And I just learned a stat last week, which is very, very critical to understand the trading balance of a particular country, the current account balance, and then taking that percentage and then comparing against this GDP. And about 75%, actually even 90% of all the countries in the OECD are negative. And you don't want to really trade those kind of countries over the long run because it just goes to showing how bad of a shape economically those governments are. And if you want my opinion, the only ones that were positive was surprisingly Spain. I believe it was Norway, Switzerland, Germany, and that was pretty well it, if I remember. Like Canada, U.S., and you can compare which ones are in the worst shape. So again, all that info came from the news app, and once you understand these benchmarks, you can use as powerful information. So here's a snapshot of the U.S. Again, you can see here, there's the 2-year, 5-year comparative. They've got the options, butterflies, the inflation rate, which is very important. Just give you another example of the stat. The Fed has had a 2% target for the government, the U.S. government, to hit the 2%. They've only achieved it once since 2011 on a quarterly basis, which is obviously not something that's working. So all of this low interest is just a farce because it's not working. Another good example is the employment rate. Yes, the employment rate's coming down, but it's low quality jobs. The wage inflation is not taking hold as they want, and the inflation overall is not is kicking in either. And it's a huge problem because when you look at what's been happening in Germany and throughout Europe, the yields have been hitting negative. And basically what that says, you put money in the bank, you're paying the bank to hold your money. So when those interest rates come down and go negative and the yields go negative, not a good sign because that becomes a deflationary problem. And because of that, that's what starts a global or a depression. And that's happening in Europe. And they're trying to kickstart the economy. Kind of works, but once the next recession hits, which is probably on the cusp right now, I think a lot of these countries are not going to survive because of deflation. It's going to kill them. And they're struggling to get the inflation kickstarted to save their economies, to pay off their debt that a lot of these countries have. So that's why it's important to understand these markets and really understand the metrics. And you can get all these metrics from basically central banks. Okay, so what we're looking at is Fed fund rate, T-bills, commercial paper, 10-year note, and other economic indicators that you can use right in here that you can Google and use these as a way to watch what's happening in the markets, because this is what's driving everything. This is what drives what the Fed does. This is what drives the markets overall on a long-term, high-level basis. And when you understand this is when you can go to any so-called retail trader, some technical analysis guy that learned it from some guru. And you go, well, why is this happening? Why is that happening? You understand this stuff, you can with confidence say, yeah, it'll go up, but you can then potentially quantify it. And that is what makes you very valuable as a trader, because this is the stuff that greatly impacts economies, which obviously impact trading relationships between countries. It influences commodity prices, options, futures market, as well as stock markets as well. So again, make sure you want to grab all this data, put it into a file when you download it, and then parse it up into a data frame. Know the relationships, what to look for, to use these as indicators that greatly impact what drives the markets overall. I can't stress that. But again, you can see all the different indicators that you have here. This is a scheduling of the calls, maybe of the auctions, and this really is what drives the markets. You could get an economic data, an economic indicator like last Friday. The jobs report was not good. Yes, jobs are coming down, but the job growth wasn't as high as was in February. Of 200,000, it was only 140,000. And then that was what suppressed the trading on Friday, and that's what dropped the market. So again, you understand these economic indicators, specifically coming out of the Fed, and understanding the important ones, you'll do well. And again, those are the relationships I'm talking about. And you can extract all of that by analyzing what is in the Bloomberg Terminal service. Ooh, that's a lot there. So again, you can do corporate bonds, and as you can see here, I don't think we can get access to it. And even if we could, I don't personally like to trade stocks. Of all the people that I know that do very well in the markets, they don't touch stocks. It's because it's like you could have $1,000, put it in the market, and you can make and lose that within a couple of days. And it's a very hard thing to predict. But if you trade this stuff, or at least watch it and trade the markets, you can do quite well. Isaac, are any of IB's data sources any good within a reasonable price? Yeah, it's a reasonable price, but you have to pay that menu option, and you can only get so much data. But that's why you want to be with IQFeed, because it's in an unlimited way. To spend a couple of $100 is more than worth it, because if you're not prepared to spend a couple of $100 on data, you're basically shooting yourself in the foot, because the idea here, you can ask James Simmons, the world's probably greatest trading outfit at Renaissance Technologies. There's a video of him saying the most important thing is data. If you're not willing to spend the data, all bets are off, because you're essentially guessing. But as I said, to understand all this data I'm showing you, watching it and automating it and building rules around all of this data and putting them into relationships and understanding what works and what doesn't, you're kind of throwing darts in the dark, or you're, as some people would say, pissing in the wind, and you're basically wasting money. And that's why I find it really critical. And anybody asks me that's new to all this, they go, well, where should I start? And I go, well, read the news app. If you're not willing to learn the news app, you're not willing to spend money on the actual data similar to what I'm showing you, and you're not going to get the real fundamentals of how the market works. You will just be guessing, and that's up to you. But you cannot afford not to understand how these relationships play out. And as I said, you'll be able to forecast and quantify knowing this stuff. And as you build out automated trading scripts and analytical scripts and knowing the data, I'm not saying you're going to do well, but you'll be able to do much better than just, as I said, pissing in the wind. Okay, let's see what we got here. Okay, so this is a description of the particular bonds. Again, if you want to use this, always look at the data that's available to you on these screenshots. This PDF was pretty good because it explains it. Again, you get the yields, you get the spread, and that's things that analysts are using to watch, and they have the metrics in place to say, oh, here's an opportunity, I'm going to trade it because this spread is here, it's narrowing, therefore I'm going to short it. If it's widening, I'm going to long it or whatever. But understanding that's very important. Okay, so we have the top bond news. News, again, you can pretty well probably get in IQ feed. Just give me a second here. I'm just noting. You know what? I'm going to switch positions here. Just give me a second. I just found my battery's dying. Give me a sec here. You can hopefully watch my feet. Sorry. Okay, I'm going to have to reposition here. So give me a second here. Sorry, I just noticed my battery's down to 18%. So hopefully this will work out. Everybody with me so far? Just give me a yay, nay. I'm almost there. Sorry, Ron, if you can't see me. Okay, thanks, Isaac. Give me one more second. Sorry, guys. I'm hoping to build a better environment here. So I'm here. I haven't dropped you guys. Okay, sorry. So you get to see my shadow of a face, so I'm now anonymous. Sorry about that. All right. So anybody got any questions so far? This is just the predictable ways of doing it. You guys can see my screen okay? Okay. So again, it's similar with corporate bonds and also with the government bonds as well. I wouldn't focus too much on corporate. It's an expensive game, but it's not bad to use as a way to, if you want to trade stocks, as a way to analyze companies for trading opportunities. All right, so here we've kind of hit on it a lot of economic data that you can use from government. So these are typical indicators that you could use. Okay, and they also include the data source. So we've got here mortgage applications that obviously impacts the housing market, employment, non-farm productivity. There's also the payroll, the ISM for manufacturing, factory orders, blah, 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 blah. You can easily get this information through the Fed. All you have to do is just do a Google search for these and just say data download. You should be able to find them. And then once you understand how to do the URL, you can then use, I can't remember the name of the download package in Python. And then again, as I said, you could use pandas and NumPy to parse up the data, put it into a data frame, and off you go to analyze. Yeah, the ISM is what you're looking for. You can get that through the University of Michigan, I believe. And I believe you can also get that through the Fed, Fed at St. Louis Fed. That's the big data source that you can use for Fed data or U.S. economic data. But what you have to understand is if you are going to use this approach, they do occasionally change the URLs. Now that's if you want to use a free data source. There's also tradingeconomics.com, which gives you some really good info. So let me just go over there for a minute. I'm going to pull up my browser. So if you want economic data, there's this site called Trading Economics. Hang on here. .com. Let me just see. Can you guys see my browser? You might not. Okay, just give me a second here. There we go. Okay, can you guys see my browser for tradingeconomics.com? So again, here, Isaac, you were asking about the ISM. It's right here. This is not free. This is pretty expensive actually, but if you want to follow what I do, I might later on down the road, instead of worrying about the URL and the data source. It's a real pain, and if you can afford it, do this and understand the data, economic data. So here, you can get, as this headline here, the data for the ISM, for the U.S., for the service sector, non-manufacturing PMI, and then in there you can get the actual, I believe it's monthly. Right here, you can actually get the data source through that, similar to Quandl, and then just make the call, download the data, and it probably already will be in a data frame for you. And again, you can analyze, and it's fantastic. You just got to pay for it. And here, yes, okay, cool. Okay, so that's where you can get your data. And this is globally for any country. You can see here it goes right down to car registration, car production, and you know that information, that's forward looking, okay? Because as an example, the ISM, what it is, it's a survey going out to a manufacturing association, and they break it down. How is your outlook for the next 3 months? How's your outlook for the next month? It's up, okay. That means that manufacturing is going to go up. There's confidence, boom. That's going to lift the economy. That's going to lift a series of stocks in that sector. And that's what happened on Friday with the ISM saying it's down. The market went down because of that. And these are the predictable patterns that I speak of. Steel production, mining production. I mean, it's just on and on. This is the best data source that I've seen for economic data. It's forward looking, and you can predict the markets using this, build risk metrics around it, probability as well, looking at patterns from the past, and maybe making a forecast on what it will be, among other types of factors as well. So again, this is very, very powerful information that pretty well impacts everything: futures, options, stock, and currency. Because you'll see here, if I go back, you'll see that all the countries that were listed. Okay, so we've got here Russia inflation year over year, South Africa GDP. Imagine knowing that and understanding if you're going to trade the South Africa Rand, that kind of report, positive, boom, you get a pop in the Rand and the South African Rand, and you could trade that across different countries that have the trading relationships, and really understanding things like the balance of trade, compared against the GDP. There's so much data out there, and understanding those relationships. That is how the human-based traders use it. But here's your advantage: if you know the automation using something like XLQ or automation, you can take all this info and put it into your own scripts and really understand those relationships, understanding the probabilities, and boom. We should do a group on data sourcing. I totally agree. And that's what I'm doing now. I'm compiling those lists and understanding those relationships. Very powerful information to know. That's all I could say. And this is predictable and it's consistent. And you can get, if you focus on the headline news stuff, those are ones that will get you the best swings. You're on the right call. You'll do very, very well. Okay, so let's go back to the PDF and see what else they have. But that's a really good site, is the Trading Economics as an indicator. Okay, just trying to go back to my PDF here. There we go. Okay, so, but these are just examples that I'm showing you, and these are the data items that are in the Bloomberg service. So you can see these are all scheduled as they come out in a calendar. And knowing these calendar events, as I showed you also in Trading Economics, as the South African Rand or GDP, that's going to have a huge impact on a variety of trades as an opportunity. Understand those relationships, You can line those up the next day, make some probability calls, and figure out that market direction. Okay, so calendar info, blah, 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 some parameters. Again, inflation here with the PPI, CPI, core inflation. All of this data is really powerful once you understand it. I cannot stress, and there's a lot of predictability here. It's incredible. I just don't know why people don't pay attention to it. The professionals do. That's why they have these services, and that's why they pay up to, as Isaac says, is up to 25 grand a month on a 5-year term. I might add too. So here you get the exports, imports that greatly impact a country's trading relationship. Well, let's say China is a great example. For instance, we know about Trump. Trump's very unhappy with the trading relationship between, let's say, Germany and China. So when you see what he sees through not himself, but his advisors or whoever's on their teams, this is the stuff that they're looking at, and this is understanding what impacts what. I can't say anything more above that. Got another question. Isaac says he would pay, so would I. Would any else be interested? But I don't have 25 grand. I don't even have 2 grand a month. I mean, I gotta be realistic, right? Okay, but I'd be definitely down. Yeah, I know it's not 25 grand. Okay, so here you could see real GDP comparing other countries, and maybe out of this kind of snapshot, knowing where to invest. Just an example, you can get their how hot are their indices right now. People are moving money out of the U.S. markets and putting them in emerging markets. But where? This is how you find out. And you're looking at this kind of economic government data that indicates what professional portfolio managers are looking at on how to set up their trades. Yes, I agree, Isaac. The combinations we're adding, IQ trading economics, is probably a couple more, and IB as well, or any broker really. It's really good to have. Economic statistics, again, we're looking at GDP, we're looking at government spending. This is very important for understanding the trading relationships of one country versus another. And then out of that, you can get all kinds of Forex or currency relationships too. So you can understand how currencies play out. And one news event, one indicator, one calendar event will impact a commodity that the country's only export would be. That's going to greatly impact their currency. And a lot of this is forward-looking. And it could be as soon as within probably a few hours once that news item comes out. But nobody's doing this. That's the key. Nobody does this. Okay, again, we look at things like unemployment here. Again, I'm always looking at what I'm seeing, what they're using, what I have access to, and trying to mimic it through other data sources. Here we have existing home, pending home, new home sales, who's buying what. The biggest driver right now of quote-unquote quality jobs is housing, construction. Knowing these indicators greatly impact those jobs, which greatly impact housing suppliers and the suppliers of that material and their services. So knowing this just around the housing market, excuse me. Wow, spring season's upon us. But this is really important stuff. That's why I look at this data and knowing what's important and what's not. Okay, knowing how to analyze it, and not just that, but knowing how to interpret it and knowing what to do with that information. And as I said, building out trading rules for that will impact the next day or the next month or next week. It's not difficult, but it's just putting the time in and learning it. Okay, here's a great example that I've not seen before. The U.S. exports these products to these countries based upon these percentages. Again, you can get this same information through tradingeconomics.com. You'll get raw data, but you'd be able to get similar data through Trading Economics just by analyzing where is the U.S. importing what, in what quantity, to what country. That's a trading relationship. which will have therefore a relationship between that currency and that of those two countries, let's say the U.S. and Netherlands or China or whatever, Japan or Canada or whatever. This is really powerful to understand, and comes back to what I've also talked about, the commodities, what's being exported. Is a hard product? Is it a soft product? Is it a commodity? Raw? Is it fabricated? There's so many trading opportunities in these kind of charts, and understanding that kind of information. I think, oh, right, and then we get into the commodities. Commodities is very powerful in the economy. A great example that we used a few weeks ago, I think Isaac was part of this. Just give me a second here, I'll load up my browser. We looked at the trade, what's the most, what in the futures market, what's being traded the most. So what we looked at was, if you do a Google search, most traded future contracts, contract volume. Yeah, that's right. As Isaac, it's all agriculture. I always thought it was oil, gold, euro, dollar, but no, it's not. It's let's see. We want futures. Here we go. So exactly. When you watch this simple chart, this is where the money's at. If you're in the futures market or the options market, in the world of commodities, it's in these particular assets or securities. Why is the VIX being traded a lot? See, it's changed for the negative. That means that a lot of people are short in this contract. Why is sugar up? Why is cocoa up? Why is live cattle? But notice, nobody's trading gold. Nobody's trading any kind of energy product, oil. It's all agriculture. That's what's being traded right now. And you would never hear about that in Bloomberg or CNBC. But understanding this sort of information, that's where the money's at right now, is in these contracts. If you trade options or futures. But you see here, not a lot of people are playing the S&P itself, the index, like the E-minis. They are playing the VIX because it's volatile. That's where the money's being made right now. Same in agriculture. Yeah, the VIX will crash. It's too low. Yeah, probably. If you had an automated trading system at a high frequency level, you could be probably literally printing money right now. If you knew how to trade it and you had a good algorithm or sets of algorithms that were automatically just trading on the VIX, you do well. And not just only in the US, but in Europe as well with the Stock 600. You could do well just on the VIX and shorten options and whatnot. But just lots of ideas here, guys. I mean, I could go on and on about it, right? So let me get back to the PDF. Okay. So I've given you how many ideas and potential and predictability just from looking at what's being traded in using the Bloomberg Terminal service as your roadmap, understanding the data, and now we're looking for alternative data sources, and from there be able to mimic what is in the markets with what's, let's say, in the Bloomberg Terminal, and building trading scripts around it with automation, obviously, as the ultimate goal. And building rules around that, because that's what you're really doing when it comes to trading. But you want to trade it in an automated way. Okay, so let's see some of the other screens here. So here's oil for West Texas, WTI. Let's see what kind of information's here. Delivery contracts. You could probably get that definitely through IQ Feed. And here's an interesting one. The tick size, the volume of what's being traded at that time. You can easily get that in IQ Feed. And the value, the bid and ask. And I mean, this is more high frequency trading level if you want to go that level, but you can definitely do that. You have the contracts, and if it dries up, you know that's not an opportunity anymore. You always want to go after where the maximum opportunity lies, especially if you wanted to. In this case, if we just looked at the bar data, bar charts, or whatever it's called, you can see all the money and all the contracts are being played in agriculture. That's the hot market right now because there's nowhere else to go. Energy, metals, all these future contracts are drying up, but there's some activity in the agriculture. So that's just another extreme example of knowing what to look for using the Bloomberg Terminal. Now here, the Bloomberg is important for weather. If you're going to trade, obviously, the commodities, agriculture specifically. If you're new, don't trade CL, do the mini crude. Right. Because there's no, as I said, there's an global supply of it. OPEC's desperate trying to get the U.S. involved. They ignore them. Russia, they signed the deal to cut the supply, but guess what? They only, as I said earlier, they're only good for, only signed up for 2 months. So, here's all the different types of functionality you get with commodities, and you can see here we have shipping, info, weather, investors, news, so on and so forth. Again, you could probably get that through IKEFeed as a source. If you're gonna, I think commodities is not a bad place to be. Now again, currencies is a great example. There's a whole load of ways to trade currencies, but again, you get the what they call the dumb money, forex traders with the unregulated brokers, trading all this, just basically pissing in the wind, as I like to call it, not really understanding what's good. As Isaac says, Ethereum is a very good cryptocurrency. Bitcoin was another one that, as I said earlier, is doubled between March and May. It doubled from $1,000 to over $2,000. This one being listed here, Ethereum, is a very good one, but that I haven't said this publicly, but talking to other people, SEC is looking at sanctioning one cryptocurrency that they will recognize at a government and a regulated level, and that's Ethereum. That's why it's doing well, because there's some confidence with that cryptocurrency, I guess. And yeah, in the European Union. And don't be surprised also, Isaac, that with Modi in India, he got rid of digital cash. It's all going to, physical paper money under, was it 50 rupees or something? And yeah, the Indian economy is going digital. I know Norway, they're going to get rid of all their paper currency, as well as China's looking at it as well. Is it $20? Is that 20 rupees, I assume? But the idea here is that paper money is going to disappear and cryptocurrencies. But in the meantime, Forex, as some of these, again, basis spread, and that is part of the commodities and the trading relationship, that greatly impacts currencies and greatly impacts currency pairs. Yeah, 20 rupees, right. Applied volatility is another big one. And there's a matrix I can show you that will show you the entire cross pairs of all the major currencies. There's a currency ranker, which I've seen in the news app, which is basically shows you a chart overall of what the hot, it's all using the US dollar as the base, which gives you the highest return and which gives you the lowest return. And it's a chart which is very powerful to know. And if you can you take that and put it into real time, and you can use that as one of your indicators. Same with volatility as well. And again, you have here the option valuation for currency options, like futures and options, what I'm referring to. Okay, so that's very important to know about too when it comes to Forex trading. Interest rate, very important. Again, these are things that are screaming at you on what professional analysts are using as a way to basically predict currency pairs. So again, I always look for this data, and whatever I can't figure out here, I'll do a Google search, okay? Remember, folks, Google is your friend, okay? Google is your friend. So I just want to put that out there. very important. As I move into Forex trading, which will be my first asset class with Dukas Copy, these are the sort of things I'll be using. Let's see what else we got here. Here's uh, that chart in real time. I think everyone's seen this. That does an overall comparison between the different currency pairs. So obviously you want to be in the best performing, but you want to make the call before that best performing, blah, 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 blah. I mean, there's lots of tricks to currencies, but these are the sort of things you can easily build using XLQ with IQ Feed, okay? Because that has the functionality to build out these type of spreadsheets and worksheets, okay? And using these kind of data points as measurements, specifically on the spot, percentage of the change, and obviously your broker is going to give you a different rate as well. Okay, and then you get your bid and ask, spread, all that blah, 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 blah stuff. Okay, and then again, you'll see here where it says bond yields and equity indices. Again, that greatly impacts, they're interrelated. What happens in the bonds will greatly impact the currency. We've talked about some examples, and then that will impact the markets as well for that country. Okay. 70 of these are the majors. Bloomberg has added 3 to the majors list. It's good to know. I will tell you a good way to do that, Isaac, is actually I should mention this. When you look at the fiasco that FXCM has brought about, I just had Wanda call me last week. Why am I not trading with them? I told them they're rubbish service. Never heard back from them. The North American brokers are very bad. FXCM fiasco is a great example. Plus, with the North American based brokers, they give you a very small selection of currencies to trade. When you move into the European ones, you get obviously more European currencies outside the euro, but they also give you things like South African rand. We've talked about that, the ruble, the Brazilian real. You won't get those currencies with North American based brokers. That's why I like those kind of brokers, but they're also regular. But if you ask me, I go with LMEX or Dukas Copy, who are regulated, okay, within those countries. So you're somewhat protected. Can't guarantee it, but at least you're better protected through those countries, depending upon your account size as well. So I just want to put that out there. Now, Isaac's added the Denmark, Sweden, and Norway. I believe those are part of the Dukas Copy mix as well, of the allocation on what they allow you to trade. Because those are major currencies, especially in Europe. So if you want to trade those, I would look at Dukas Copy. Again, I don't work for Dukas Copy. I'm just saying if you want to have better opportunity, you want to potentially take a look at those extra currencies, especially when they get hot around news events. Zuma, Jacob Zuma, the president or the prime minister of South Africa, was a great example where the big fiasco going on with South Africa. Well, guess what? Traders wake up, they start trading the rand, boom, boom, boom. Now you got liquidity. As long as you're willing to short it, you could have done well in that kind of trade. Or something may happen in Russia or India or something, that where those brokers give you that access. Okay, so we got the training on Bloomberg stuff we're not going to use, and I believe there's some new stuff and jobs and community stuff, people searching, and stuff that really have no relation for your actual trading, and live help for training and briefs and whatever else. That's pretty well. I think we're coming to the end of it. Yeah, I think so. Yeah, 69 out of 69. That's pretty well over the overall approach that I look at. And as I said, the idea here is to look at the Bloomberg terminal service, get as many screenshots if you can. Look at what's available on the Bloomberg terminal and mimic it, reverse engineer it. Try to figure where you can get those data sources. As I said, we could use tradingeconomics.com, IQ Feed, and a variety of other data, maybe even through your own broker. So that's pretty well what I wanted to show you, that I'm planning to take this approach, and I'm planning to take this approach because I know it works. I'm not interested in machine learning and trying that for trading. I'm not interested in doing things like in technical analysis only. It's a combination of things, and as I said, there's one thing that will impact something else. Okay. So anybody else got any questions at all or got any comments on this? I know Isaac had some. I'm not sure. Let me just take my participants. Fran's still there. A lot of other people. Thanks for being part of that. Any questions? Comments? Okay. If there's nothing, if you're in Toronto, I've got a guy, Bernard, who's from Germany. He's coming to Toronto next week. And he's like a consultant. He's a software guy who builds strategies for people. He's been featured on the Dukas Copy TV. He specializes in Dukas Copy for Forex trading. He'll be at this meetup at the Jackassers in North York. And if you got questions, he's willing to share some ideas. If you ever want to hire him, that's up to you. Get in touch with him. He's a very cool guy. He's very busy, but his name's Bernard. No, Shalom. Bernard. If you go to my meetup under next week, he put a comment in there. Let me load it up. Hang on here. Bernard. Yeah, not Shalom. Isaac. Let me just show you. Hang on here. Going back to the browser. Okay, so if you go to my meetup.com, I know some of you may not be in Toronto. Okay, so if I go to Quant Finance as one of them. So for next Monday, June 12th, which is J is for June, J is for Forex, J is for Genius. Okay, so if you come under here, you'll find this guy. This is him, Bernard Schmidt. Shit. German. Don't ask me, but that's who we're talking to. So I'll give you the link if you want, if you're not a member, whatnot. Okay, so get in touch with him. You could probably message him if you're interested in automated strategies. That's what's happening next week. Anybody else got any questions or comments? But that's what's happening next Monday. And I'm planning to do this every Monday. If people don't know, I've got 2 courses that kind of drill down in this stuff that I've talked about. And I've provided even the source code. And my system that I'm building out as of today, I've got a lot of scripts already built with this methodology. So I'm going to implement them, get them running, and then building the whole quant analytics service around that and I'm currently doing the daily human-based videos on the analysis of the markets every day, but I'm also going to be posting these as well. And I think it's gonna enable you to see the markets something in different ways, as I said, that you won't see. And the other big thing is, a few weeks ago, thanks to Isaac and somebody else, I think it was Ron, that said, hey, go check out the bar charts and you'll see, agriculture is the big hot thing right now in the futures market. I would never have guessed because for years it's always been, as I said, oil, gold, or some index or something. And lo and behold, it was agriculture. And these are the sort of things that enable you to, do quite well by trading a very liquid asset or a future category that traditionally is not very liquid, but now it's very liquid because there's nobody else nothing else to trade out there. Isaac, there's a newbie watch list I could send. Yeah, if you want, Isaac, like I said, look, we've got a community going. We could post it on YouTube, Facebook. We've got the Facebook group, which just broke through 10,000 people. I'm very happy with that. We've got over 3,000 on my LinkedIn group. So each group has their own engagement, but if you want the best engagement, just focus on the Facebook group. There's a lot of good stuff in there. We've got Quant Insti post stuff in there. We've got some automated HFT guys. We've got a guy that does his own analysis, posts it within the group quite frequently. And it's a pretty active group. And there's some good courses that come out of that get posted in there for Python and MATLAB. Some are, but mostly Python now, and that's what I focus on. And then for execution, if I want to go at a faster, better execution, more rigid, obviously I'll probably use something like C++. So the pros use a top-down chart watch approach. Yeah, they use these types of services that I presented through Bloomberg, and thanks to you, Isaac, we were talking about it, and I've always analyzed it through my Bloomberg News, and then you sent me these PDFs, and then there's other PDFs. If you go to Yale, there's some PDFs there that break it down by functionality. Can you guys see my screen okay? Hang on, let me just share my browser again. Okay. So if you go to my website, actually, if you're coming in through my meetup group, I did put the links up there, but just give me a second. I'll show you the better way to approach it. So if you come down here under this little search bar, just look for Bloomberg. There's a link in there if you want the other links for the other. It's always universities that have these manuals online that you can download and take a look at. I think it's this one. And I'll get to that query in a second. I believe, is this it? No. Give me a second here. Okay, so it's the first one here. Okay, yeah, I think it's the first one here. So I'll put this in the chat if you want to capture it. Yeah, so here, right here, these are the data sources. I've made detailed videos. We've got the Scranton, which I just showed you the PDF. You can get that there. And then if you go here under Yale, right here at Yale EDU, it gives you a whole whack load of other PDFs that break it down by asset class or different types of ways to analyze, like portfolio management. And again, I'm going to expand on those later on down the line. So I'll put that in the chat if you want. Hang on here. Just give me a second, Isaac. I'll get to you in a minute. Okay, there's the link in there that I just grabbed for coming to my site and grabbing those links and where to get further PDFs. So you said the pros use S&P 500 greater than CL, greater than gold, greater than TLT, greater than dollar index, than whatever you're watching. Yeah, I mean, you got all the major U.S. asset classes for sure. Just so those know, there's CL, oil, gold, TLT, which is treasury, and the dollar index. But there's more. I think you got to add more. But the nice thing is, you could have 3 asset class or 300 securities that you're watching, build rules around it. It will probably take you quite a while to build those, but once you understand the thresholds of each, understanding those relationships, what impacts what, you can have a nice trading system around that and build an alert system or a signal generation system, and then you could add in and build your own order management around that. You could build order management out of Python. I think Python is just as rigid. But again, you're probably not going to do a lot of positions per day. And I think Python should be adequate for it. Anybody else got any questions, though? We're coming up to 2 hours. Hopefully it was a good session for everybody involved. And I'll definitely put this video up on YouTube so other people can watch it. I'm sure I'm going to get some instant hate on it for whatever dumb reason. Just some high egomaniac hedge fund people that you may or may not know about. Anyways, yeah, it's been fun, Isaac. Again, you've been a consistent person. I know Gordon's out there and Ron's out there and some new people. Let me just check the participants. Rick is new, Yash is new, NS is a little bit involved as well. But I'll definitely put this up on YouTube. You guys got any comments or questions at all? No problem, Gordon. Hopefully this will give you a better idea of my direction and why and the theories and stuff. Gordon's an amazing guy. He's great at helping me organize the actual physical event, so I appreciate it, Gordon. Yeah, it's no problem, no, man. And anybody else out there, hopefully you got some good info. No problem, Rick. And anybody else. Hopefully people got some good use out of it. I didn't anticipate I'd be going in more about the data sources and about the trading relationship. But I just want to give you some real world examples that I've come across over the last couple of weeks. But from what I've seen, this is the most profitable and consistent way of doing it, and building your automation. And if you ask me, if you're new to all it, Python's your best bet. It's perfect for it because it's very simple, and it's condensed code. You're not writing 200 lines to do one little thing. With Python, it's all free. It's all true open source. And with the data sources, and if you have the ability to download the data source or connect into it using, let's say, Trading Economics or IQ Feed, you're good to go. And there's going to be some other ones as well. And don't forget there's the other ones from your broker as well. Anybody else got any questions or concerns? Just under 2 hours. Doesn't bother me to be online. If you got any questions about automation or trading or whatever, and if you're in Toronto, come on out to that event. It's up on the meetup I just put up. I just got in the I sent that to somebody privately. This is the meetup. Okay, that's the meetup group for next Monday, on the 12th. Anybody else got any questions? Otherwise, I could shut her down, and you can always reach me on Facebook. Maybe I should, If you go into my blog under support, so if you come under my quantlabs.net and just click on support, you'll find here the button that will take you to the Facebook group right there, and it's free. Anybody can join, and you're good to go. And we've got just over 10,000 people now. It's pretty big. Anybody else? Questions, concerns, hate mail? I'll even take hate mail. No? Okay. Usually I do it going once, twice, 3 times, and I'll do that. And if not, we'll shut down for tonight or today, wherever you're at. Okay, so I'll do it going once, going twice, going 3 times. Okay, so we're done. I'll post this on my meetup group, the Facebook, and the website, and YouTube as well. And thanks, Gordon. Ciao, Gordon, and everybody else. Thanks again for coming on out, and thanks for being part of this. This is a good one. I'm pretty happy with what I presented. All right, guys. I'll have a good night or day. Talk to you later.